3, 2, 1. Good morning, traders and investors around the world. Welcome this Friday, February 17th. End of the week, start of a 3-day weekend edition of pre-market prep with StockOdds. Joel Elconin, joined by the factual Rob Friesen here on a down morning. I mean, there's no doubt about it. We're down. We're not out. We're down 23 handles at 4,077 and a quarter. We're still range bound, folks. Last week's low, we revisited 60.75. You might have taken a little heat when it went to 57, but we're back up. I don't know if we'll go green on the session. I think that'd be an important thing for the bulls. The buck is not helping thing. That's up 47 cents at 104.26. Bonds are climbing their way back off the low, but the bond market's still trying to tell us something here about rates. Down up a quarter of a point, 125.14. Crude taking it on the chin, down 265 at 76.10. Gold still selling off, but I got a little rebound going, down 640, 1845.30. Silver, that's been the weak link. How many lower lows, lower highs, lower closes do you see there? Down 14 cents at 21.58. And Bitcoin, a good week, not such a great day. Give it a little back, down $445 at 24,195. I'm going to stop the screen share. Rob, Factual Friday. And I, you know, when you put that up there, I looking at the facts and like the numbers and levels and stuff, and I kind of hear where you're coming from, but I think a little different perspective. What facts are you referring to?
Oh, well, I was going to call it Freaky Friday or Psychological Friday, or I just came up with Factual Friday. But, you know, it is expiration, right?
Yes, sir.
So, you know, before, it's a little bit of a guessing game to some degree where stocks might gravitate to on a monthly expiration. We look at maximum pain, and that is where most options would expire worthless, right? Which is typically the case over the long sample. And so there are options that are rolled, obviously, but you know, where would most expire worthless? Because you know, options are used a lot for hedging, and obviously players don't want them exercised, right? So where would most expire worthless? And you have to take the calls into account and the puts into account, and so there's this kind of moving target to some degree about where stocks will actually close. But when you get to expiration and they close, that's a fact. Closed at that price. I mean, then the guesswork is gone, right?
I don't know where. I don't know where things are going to close, but I know when.
There you go. Yeah, you know when. But there is this point to this target of maximum pain. So we use that a lot in pairs trading, for example, where you have a spread relationship on, and it's about, you know, a week to 4 days out before expiration, and you look at where the maximum pain would be for both stocks and see if there's a drift potential on your pair, either against you or for you. And that's been something that's been helpful over the years. You know, you try to dial it into where you get the drift in your favor, obviously. But my point is that when Friday, you know, finishes, things are closed, proof's in the pudding. It's fact, right? There's no more guesswork.
You know where I think the max pain would be? And I'm not for the I'm going for the S&P futures, and the SPY is a little bit off, but I think 4,100, because you know, you were higher in the week, you're lower in the week, but just carve out all the 4,100, you know, calls and puts. That's what I'm thinking. We're currently trading 40.80.
Okay. All right. Well, people can look it up. They can go to maximum-pain.com and throw in their stocks and take a look at themselves if you want.
Really?
So
what it did. There's really a site that called that?
Yeah. Mm-hmm. Used it for years and years and years and years and years. I mean, I'm so old already, right? So not as old as you, but I'm old. I'm catching up. I'm catching up, Joel.
We're only a few months apart, I think, right?
Yeah.
When's your
Yeah.
birthday?
I just had it.
Oh, you just
I'm,
turned
uh,
59, right?
yeah, you betcha,
Okay,
man.
I got you. I got you. Okay. All right. So let's give me some facts,
Okay, so
Rob.
that's one thing. So then I I don't want to have it, I don't want this show to be political, but nonetheless, I think one thing in our lives that's the most precious and also, you know, not talked about as much, and I have too little of it, is time, right? So since time is precious, you want to cut through the bullshit, right? And I sent an article to some of my traders and just said, look, either this article is true and the points are relevant, or they're not. So I'd recommend you guys can look at it for yourself. And I've made a lot of references to this over the last year, and it's an article from Jim Rickard's Daily Reckoning. I know he has his biases and some drama here and there, but it's a good article on the real situation in the Ukraine. So you might want to read that. I mean, basically, the narrative that we get is kind of whitewashed, and we don't get all of the details that are going on. So I recommend watching, or it's not a video, it's a article, but Zero Hedge reposted it, so you can find it on Zero Hedge or go to dailyreckoning.com. I recommend to read it and think about it and say, are some elements true? Is it made up? But let's be critical thinkers. Let's not just always join the consensus. That's not good for trading. Being part of the consensus is not helpful for trading. You have to think alternatively. You have to think critically. You have to read in between the lines. It's no different than when you get your headline news on earnings. Is that the whole story, Joel? Is the
No, it's
headline the whole
not.
story?
Nope.
Right?
Nope.
And it's the guys that recognize that the quickest and read in between the lines, or can say, well, okay, earnings beat, but revenues are down, so that's going to put a kibosh on this potential or whatever. So just alternative thinking, critical thinking, looking for facts, doing deep dives, not just accepting things at face value all the time. Certainly, I think we're a democracy, so I think we should have a bigger pushback against um, editors and news broadcasters that do not tell the full story, make stuff up, have the facts wrong. I think as a democracy, we should have a bigger pushback against that. No different than the people in Ohio were screaming about this train derailment, and I mean, it's pretty serious, I think. So, would they want it whitewashed? If you live next door to that, would you want it whitewashed, or would you want it, dealt with, and the truth and stuff like that? You know what I'm saying? So I think we got to be digging deeper and getting to the facts and pushing back. And some publishers are not as ethical maybe as others. That's probably how I should leave it. Now, sometimes we talk about things that I think are great on the show, and I think, oh, that wasn't a very good show. And then I get messages from people that, like, they had amazing takeaways. So let me read you one here. Yesterday we said, the longer we are in a channel, when we break, it gets amplified, can be a big move. Those days can be an outsized return if you don't argue with it. Step back and ask, what is the catalyst? What is the driver? Is this something of substance? Can I trust this? Don't be thrown off or scared by past experiences. So he said, I needed to hear this. Thank you. Today was the first day after hearing that I had courage to put in, or so he did it before, actually, buy orders at the open. I didn't hit it out of the park by any means, but it's an incremental and important step. Really enjoying this journey. So We just kind of said that, towards the end of the show, and yet it became one of the most important pieces of information for somebody. So that's always encouraging to hear that feedback, you know what I mean? And it shows how important this psychological element of trading is, which I think, even if you're largely algorithmic, even if you're using data and implementing it, no matter how structured your framework is that you utilize, even if you were to use a completely black box, which, most boxes are gray boxes because they need to be tweaked once in a while, but don't you think psychology comes into it?
Oh
You know,
man. Oh,
right?
Rob, the
And don't you think it's
psychology.
like,
Yep.
don't you think it's 80% of the game rather than 20% of the game?
Oh man.
You know what I mean?
Did I ever tell you what my old swim coach used to say?
What?
He used to say 85% of swimming is 90% mental.
Yeah.
It's a little bit of a joke. I don't know if you got it there.
But I get it. It's meant it
It
is all
just means
mental.
that psychology, like in sports or the markets and trading, or you could have the best, preparation in whatever, but unless you got it, in your head that you have a plan and you're going to whoop everyone's butt in the pool, then what good is all the training and preparation? So
Right. So
that's what
taking
Coach
that in
Steve
point.
and Coach Steve was an avid historian, and he loved the stock market. He loved it, and he just, ever since I know him, been buying utilities. He's like, Joey, buy utilities, get that yield. Then that was his, maybe he missed out on some of the growth stocks, but yield, baby, nothing but yield. But anyways, that was a little
Well, no, but
digression
there's
there.
an amazing point to that over a long sample, right?
Yeah.
Some of these utility stocks maybe haven't gone anywhere, but that dividend is sure nice to have,
Mhm.
quarter after quarter after quarter.
You got it.
So on that note, I mentioned this before. I recall on the show at one point, I did mention this, but I think it's a good topic to bring up again. And that is, speaking of athletes, there would be a lot of mental rehearsal prior to, getting in the zone, right? How do you get in the zone? How do you get prepared? In my office, we used to have this countdown kind of thing that we had two stages of lighting. So we had the main lights on during pre-market prep. And then we went to our secondary lighting, like 5 minutes before the market opened. And what that did is, just as soon as we went to the secondary lighting, which was low level lighting, so you just focused on the screens, it set the tone right away. Market's going to open, respect, shut up about your other crap or whatever, let's focus, and the market's about to open, right? But there's a real important process in this psychological rehearsal, this mental game, this getting in the zone. And that is, say the market's gapping down, and even before you even know that, have you rehearsed for what you're going to do? So taking this theme about this trader that posted that, hey, that was real helpful. Take it to where you practice it and go, okay, tomorrow morning, if this happens, this is my response. If this scenario happens, this is my response. If this happens, this is my response. And so that you kind of see yourself doing the correct action, you see yourself responding to the market inputs and the feedback loop, and you see yourself responding correctly, and you practice that, you rehearse it over and over and over again. The same thing would happen if, let's say, you did something wrong, and then you go back and review it. Then take some time to rehearse what the correct action would have been, and then save that to your mental hard drive. Yeah. Right? So that you overwrite what did happen with what you could have done better. And that's a really important thing.
It sure is.
I just want to end on one screen share thing here, just to show
Sure, let's do
something
it.
that's
Let's do it.
important. And then I know you got to run. This is Friday before the long weekend. We're not here Monday. So just make a note that whatever the market's doing, there could be you know, a little bit of a sentiment change before we finish the day, right? Can you see my screen okay?
It takes a second.
Okay. So
It's coming up.
I just want to show
Got it.
the difference between the markets, and this is really important. Like when you're curating lists from different markets, like the Russell 2000 versus the NASDAQ versus the SPY, whatever, you have to look at how the context and how things really are. So this is the SPY. You can see, we rolled over. This week of February that we just had is the best performing week of February historically. That's the mid-month seasonality. Payroll deposits, 401k, maybe Valentine's Day has something to do with it. I don't know. But it's the best performing week of the month. Now, that doesn't mean it has to stay that way. History, can be overridden by new information. But we rolled over yesterday and today, right? And so we finished that. We've ended on expiration. There can often be a bit of a change after expiration. And as we head to the last 5 days of February, they're softer generally. So that could bring us down to, the lower end of our target, on the SPY. We could cycle back down to 400, which would probably concur with the lower Bollinger Bands at that time. So just keep that in mind. So let's look at the Qs here.
How are the Qs doing today? Because they were holding up a little bit better. I noticed they were. Yeah,
they were a little bit better, but we're getting back down to the bottom of our 5-day range here, right? 5-day, 10-day. So we're probably looking at targeting that if we want to drop a bit lower today after this bounce that we had. So I would look at that. But now look at the Russell, and you see how it's even
stronger,
more solid. It's stronger. And so why is this phenomena happening? You have to you see a pattern, you see information like this, but you ask the question why. So when we're dealing with an opportunity for growth, because people look for that. I mean, I don't think people run into the stock market and start putting new money to work or putting money back to work after tax loss selling and going, let me find the most, stable stock that will never go anywhere. No, they go, let me go and find a 10 bagger or more. Let me find some growth opportunity, right? And so the small caps is what is attracting people to say, maybe there's potential here. Now, there is a bit of a damper on that with, the Fed raising interest rates, so that makes it harder for small caps to access capital and things like that. But apart from that, opposition to this, there is more strength here and more stability in these small caps. And not only that, they might be a little bit more defensive in one sense too, because there's so many healthcare biotech stocks. Now, biotechs are both risky and they're kind of like a go-to because they're not technology, when technologies like the mega caps are taking it on the chin, like we saw yesterday. In the last hour, we saw some mega caps sell off and stuff like that. And so just I find a balance when you're curating lists from StockOdds, especially. Pull some ideas from all the markets rather than just, only in the S&P 500. It can give you a lot more opportunity. It can balance things out better. Often when, S&P's down, the Russell might actually retrace. Yesterday, the Russell was the only one that actually filled the gap. Today, again, it filled the gap, whereas the SPY did not fill the gap and the Qs did not fill the gap, but the Russell did, right? So there's something going on here in people's interest level in these small caps. I just wanted to point that out. Okay.
Okay. All right. Pre-market prep with stock odds concluding the S&P's down 30. We tried to get back up to that pre-market high and we failed. So we're feeling a little heavy here, folks. We did take out the previous week's low, got the rebound, but that 57, that 40.57 doesn't mean a whole lot to me now. We'll see if the Bulls can defend it. Everyone have a safe 3-day weekend. Join me at 3:30 p.m. for the closing print. It could be a wild one. I got a special guest coming on at 3:40 to talk about a sector that Rob and I haven't talked about much. So thanks for joining me. It's always been a pleasure getting this information from Rob, and back with you guys Tuesday morning. If you're just a pre-market prep with stock odds guy, if you're a pre-market prep person, 8 to 9 on Tuesday, and then of course, don't forget that closing print today. Could be a wild one on the options expiration. Thanks for joining us.